Hi guys, this is Chris with the Trading Dojo, and today's kind of a mix of a trade review and a discussion. Now, a question I got asked recently was, should you be trying to pass an evaluation in one trade? Well, it's really up to you. If you've passed evals before and an eval is an easy roadblock to a would-be easy payouts, then what's really stopping you? Evals are easy if you know how to maximize your edge and use risk management properly. It really comes down to a numbers game, and I'll show you how I was able to pass 200k funded accounts in one day with my funded futures. Let's get straight into it. Here's our trade review of NQ on Wednesday. Now, first of all, when we wake up in the morning, we're trading New York session. We should be developing our bias. So in this case, on Wednesday, we're looking to see, okay, what did Monday and Tuesday do? Well, Tuesday swept out Monday's high right here. So we're less likely to trade up higher because of this being a manipulation. If we look at our weekly profiles, we could see that this looks like what might be a classic Tuesday high of week. So what that would call for is Tuesday sweeping out Monday's high. We have both of those right there. We could also see that Asia here consolidated. London swept out Asia's high. Therefore, we no longer need to come up and take Asia's high, which is typically an important time-based liquidity pool. And off of that, seeing that we manipulated off Monday's high and Asia session's high, we have plenty of previous day lows right here. So that's how we're going to develop our bias. Now, our execution is obviously gonna come between a certain time frame. So on this day, we're trading silver bullet. So let me drop down to the lower time frame. Just dash these out as our liquidity pools. So right here, we open up, we have quite a bit of consolidation. Now, our first step to finding some kind of execution is going to be a market structure shift. Now, I see over here we already had one, but obviously we're not over here. We weren't trading at this time. We're trading around the silver bullet time. So let's see how price develops. Okay, so we trade lower. We also have this low. So we trade through that low. Now we have some kind of market structure shift because this is coming below these lows, strong candle displacement, and we create a fair value gap. Now, what would make this lower probability is that we just swept Tuesday's low. Yes, we have more targets, but we can expect some kind of retracement. So right here, some people might try to get short right here, put their stop down here, because you're seeing that we're creating engineered lows. Even though we swept this low, we have more to go, and we're stopping before it. That means we're likely to retrace and at some point return to those lows. So if you would have taken this trade, you would have gone stopped out. That's okay. That's why we have risk management. So I did take this trade actually right here, not heavy size, and that's why I was able to survive. And I'll show you how I was able to capitalize on the day regardless of starting with a loss. So we're gonna let price develop some more. Okay. Now we've swept out these highs. So these were equal highs right here that we swept out. And let me take this off. And this would be a manipulated high right here. So like those highs we were talking about before, how Asia session was swept out earlier in the day, right here, this is a protected high because it manipulated an important liquidity pool. And that would be the same thing right here. So I'm not looking at, okay, we're probably going to sweep this one. No, we already took out the equal highs right here. So there's a possibility we might trade lower now. Okay. So right here, we see our market structure shift. That's right here. And when we have such a tight IFAG, and it's not too far off from where we initially manipulated. In other words, if your entry isn't going to be too far from that IFEG being created, so if we entered right here, then that's okay. You can market enter. This is what I did. Okay, we're aiming for these lows, the ones that we mentioned before, right here, right here. Okay. Now I'm going to enter 2 sell positions right here. Okay. So the premise of this video was to show you the risk management and how to survive and leverage into a position so that you could pass in a single trade or make a large amount of profit in a single day. So letting this play out now. At this point, I'd be interested in going break even because we have this fair value gap. We've took out quite a bit of internal liquidity and we should see continued displacement through here. Okay. Now, I'm not getting scared right here. I'm going to let the trade play out. I'm going to see what kind of more development do we get. Awesome. We got another IFEG in our direction, heavy displacement. So I'm going to enter one more right here. Now this time I could keep my stop up here. And our take profit is going to look like, well, if we're aiming down here, about 6K. So what initially was a $600 stop up here, we've leveraged into 3 positions, 3 contracts with a potential outcome of $6,000 in profit. Now, if you're doing the math, that's 1 to 10 RR. Okay, that's 6K in a trade, nearly 6K. So that's enough to pass your 100K. So I'm not trying to emphasize, oh, full port, any move. I started off this day with a loss, but I made that a small loss and I was able to capitalize later into the day by managing my position sizing right. So this is how you scale into a trade in order to pass funded accounts. And this is more of an aggressive approach. You could go lighter risk. You could do this with normal funded accounts, but this is how you pass them quick. And so this is what my execution looked like. This was my initial loss, my entries, my second entry, and then my exits right here. I had a couple hundred left to pass the challenge. So I just took a little scalp down here and finished it off. If you guys haven't yet, please hit the like and subscribe, and below will be the Discord where you could stay updated on all our free content. Thank you.